Hello guys, Joe with Bitraged. So we've gotten a lot of requests, we've gotten a lot of comments asking about Tether, and so we wanted to do this video and give you a more comprehensive breakdown of what's wrong with Tether and why it may not be as great as they say it is, and it's not as transparent as they say it is. So they just released their transparency update, where they call this their proof of funds. This is not an audit. Keep that in mind. I've seen audits. This is not an audit. This is simply a document prepared by Friedman to satisfy some of the claims that funds aren't there. And that's all it is. It's not an audit. And keep in mind, I'm not bashing Friedman. They are only doing what Tether has told them to do. And so it's not an issue with Friedman, it's an issue with Tether. So they say this at the beginning. This information is intended solely to assist in the management of Tether Limited and solely for management's use, and is not intended to be and should not be used or relied upon by any other party. Now, for a public audit, that is extremely odd language. So this document was only produced for Tether's use. So it doesn't satisfy the public's questions. And really, if you're looking at this document to me causes more alarm than if they didn't even release this. And we'll go through a little bit of it here. So if you look at some of the things that Friedman lays out in this document, they basically say that the only thing this document proves is that on September 15th, there was the funds in bank accounts. That's it. It does not prove that prior to that or subsequent to that date, there were funds in the account. It says that right here. Our procedures performed are not for the purpose of providing assurance and are limited to the findings listed below as of September 15th at 8 p.m. We have not performed any procedures or make any conclusion for activity prior to or subsequent to September 15th at 8 p.m. So what they're saying is the funds are there as of September 15th at 8 p.m. Prior to that, they may not have been there. Subsequent to that, they may not have been there. The only thing we're guaranteeing is that the funds were there at 8 o'clock. And some of this verbiage would be in a document of this nature anyways, but this here kind of makes you question, so it doesn't exactly inspire me with confidence. So we come down here, and they have this table. So 60 million was in a bank account, which they don't list the name of the bank, which I really don't understand, because if this is supposed to be a public company that is operating with transparency, why not list the name of the bank? So I don't know why they don't. It's no security risk to name the bank, so that's just a side note. So 60 million in this bank account under the name of a trustee. 60 million under the name of a trustee, 382 million under Tether Limited. And at this time, at the time of this document, there were 442 million Tether issued. So if you add it up, they would have the funds at this time to cover all the Tether in issuance. So what about now? From this date till now, 1.5 billion Tether were printed. So they had 400 and some million. 1.5 billion gets issued. And so they want you to believe that there is $2.2 billion in a bank account somewhere backing this up. And notice this language: as of September 15th, the bank held this amount. As of September 15th, the bank held this amount. And they still do not release their balance sheets. All they show you here is a table. So there's a note here, note 4. FLLP did not perform any procedures to confirm that the client controls the treasury address or the creation address, or to confirm the client's representation that all Tether tokens in circulation can be determined by reviewing activity for the creation address on omniexplorer.info. So basically what Friedman is doing here is absolving them of any weight in this matter. And keep in mind, as I said before, I'm not bashing Friedman. They're just doing what Tether has told them to do. So that's their new transparency update that is not very transparent at all, and it's not an audit of any sort, of any kind. That is an issue in itself. Let's say all of that is true, there's no issues there. Here are some issues that you may want to watch. So this was published in November of 2017. Paradise Papers reveal Bitfinex's Devasini and Potter established Tether already back in 2014. So why is this an issue? The two guys from Bitfinex established Tether in the Virgin Islands in 2014. This is a huge conflict of interest, if nothing else. Think about it this way. If a stock exchange had access to a service and owned a service that could essentially print money out of nowhere, how much of a conflict of interest would that be? And how long would it take for them to be shut down? For an exchange that trades an asset to hold a product that can create money out of thin air, that is a huge conflict of interest. If nothing else, if there's nothing else about Tether that bothers you, that should bother you. And it's not just us saying this. There are smart people, there are lawyers, there are intelligent people in this space who are saying the exact same thing. They're really questioning this whole operation. So this guy here, Bob, wrote an article, and he used to be an attorney and turned tech entrepreneur according to this article. He talks about the connection between Bitfinex and Tether, and he has this little graph showing the connection between these two guys and Tether and all the different corporations and holdings they have. But what I really wanted to show you about this article is this graph here. Now, keep in mind that correlation does not imply causation, but as the price of Bitcoin runs up, as soon as a correction starts to happen, Tether gets printed and issued and gets dumped into the market. 18 million here, started to correct, price goes up. Starts to correct, Tether gets issued, price goes up. 200 million got issued at this window here. And if you just look at this and you look at the dynamics of the market at this time, this would have ended up as a correction. But it was propped up, and Tether got dumped into the market, price goes up. Tether gets dumped into the market here, price goes up. Every time the market tried to correct on this whole run up, Tether gets issued. Tether gets printed and dumped into the market. Now, it's not completely Tether. Obviously, the news had a lot of coverage on this whole run. As the price kept climbing and climbing and climbing, the news really talked about it over and over and over and really got people hyped up. And it did promote a bunch of people to get in and buy. And so some of this run is people buying. And really, all it takes is pushing the price in a direction to get people to continue it and pick it up. So if you start a price going in a direction, people are going to pick that up, and all you have to do is, when the price starts to correct, prop it back up, and then the buyers come in and pick it back up. So Bitfinex is the leading exchange in volume for Bitcoin. You know, if you just look at volume numbers, 63,000 right now, which is higher than any other exchange that trades Bitcoin. And so it's a huge exchange, and their connection to Tether is worrying at best. So now I'm going to show you a timeline which shows the connection backed up by sources between Bitfinex and Tether. So it all starts in 2012. So iFinex becomes the parent company for Bitfinex and Tether, and it starts first, obviously. In 2013, Bitfinex incorporates. Phil Potter runs the company alongside this guy here and this guy here, Devasini. If I'm sure I'm butchering his name, but you get the point. So in July 2014, Brock Pierce announces Realcoin, and Brock Pierce has a lot of scandals on his own, and so I don't think I would back anything that he backs, but nonetheless, Realcoin was built on Mastercoin, now called Omni, a protocol that runs on top of Bitcoin. In September of 2014, Potter and Devasini set up Tether Limited in the British Virgin Islands, but tell the public that Bitfinex and Tether are completely separate. Realcoin rebrands to Tether, stating it wanted to avoid associations with altcoins. At the same time, it announced that Bitfinex was a huge partner. There is a question there whether or not Bitfinex just purchased Realcoin and rebranded it, and I believe that is exactly what happened. Here's an article from 2014 which talks about Realcoin rebranding as Tether and entering private beta. And as you can see here, they have a couple of partners, and the largest one being Bitfinex. So Tether begins trading in 2015, and the amount of Tether in circulation remains pretty stable. So it doesn't change all that much from really 2015 till 2017. So it grows at a pretty reasonable rate. So in June of 2016, the CFTC fines Bitfinex $75,000 for illegal activity, essentially. And in response, Bitfinex moves its money from Omnibus account into multi-sig wallets protected by BitGo. In August of 2016, we had a huge hack, which was monumental at the time. The thief got away with 120,000 Bitcoin, worth about 75 million. And they never really talked about it too much and released a whole lot of details, but BitGo, the security company that had to sign off on the transactions, claims that its servers were not breached. It was not an issue with their side. So in August, what happens is really interesting because it plays into the idea that at the time Bitfinex had a lot of solvency issues. So after all of this happened, Bitfinex goes out and issues BFX tokens, which are initially valued at $1. These tokens can be traded or used to buy shares in iFinex. So this is really interesting. At the end of August 2016, Bitfinex announces it has hired Ledger Labs, which was a blockchain forensic firm, to investigate the theft and perform a complete financial audit of its cryptocurrency and fiat assets. Later, Bitfinex actually admitted it never hired Ledger Labs to perform any audit to begin with, and so it was simply a ploy to buy time, to get the public to believe in Bitfinex again. In October, BFX tokens drop in price, and they convert those tokens to RRT tokens. And then what happens in March is really interesting. So in March of 2017, Wells Fargo, which was the last bank willing to process Bitfinex transactions, cuts off all services to Bitfinex and Tether, according to court documents. And keep in mind, this is the important thing to remember, Bitfinex was not a direct customer to Wells Fargo, but a customer to the banks which used Wells Fargo as a partner. So if Wells Fargo as a partner saw the issues with Bitfinex and wanted to cut ties, there must have been some serious issues going on at that point. In April as well, following an announcement about wire delays, Bitfinex announces it is shut off by all of its banks in Taiwan, and at this point they lose all the ties with formal banking, and so they have to spread it out over a series of banks in several countries, and so it really complicated things for them. So after declaring that they never actually engaged Ledger Labs to do anything, they hire Friedman to complete a comprehensive balance sheet audit. So on November 7th, leaked documents dubbed the Paradise Papers reveal that Bitfinex and Tether are run by the same individuals. On November 19th, Tether is hacked. 31 million USDT worth, the equivalent amount obviously in US dollars, are moved from the Tether Treasury wallet and sent to an unauthorized Bitcoin address. And then obviously we know what happened on December 6th, where the CFTC sends subpoenas to both Bitfinex and Tether, and they didn't actually make the documents public, so we don't actually know much about that. We just know that the subpoenas were issued. Later that month, in December, Bitfinex suddenly closes all new account registrations, which is not all that odd because many exchanges did that simply because of the rush of new users and they couldn't keep up. And really the odd thing about this entire story that I've just laid out is after months and months of stating that an audit was coming for Tether, they part ways with Friedman. And they say that an audit would be unattainable. And then they issue this document from Friedman. So it's really odd. It's really strange. And then from the time where they were subpoenaed till now, the majority of Tether tokens in issuance were issued. They were issuing about 100 million Tether tokens a day there in January. And so you can argue that they have the funds in reserves. Even if the funds are there, even if they're completely there, there are some serious issues in conflict of interest between Bitfinex and Tether. An exchange that operates a service that can essentially print money out of nowhere is a serious conflict of interest, even if nothing happens. And this article here was reprinted on NASDAQ.com, and so it's not just some nobody talking about this. It's all sourced. You can go look at it. You can go look at all the sources. No matter what you say, just looking at this chart, this jump in market cap is not normal. This is not something that just happens in a normal market with a coin like this. It went from 1.6 billion to 2.2 billion in a day. One day. If that doesn't strike you as odd, if that doesn't raise red flags, I don't know what will. So there is a question, well, is Tether even a big issue? Because the market cap of Tether is 2.2 billion and the market cap of Bitcoin is obviously much, much higher. But I like this guy's analogy, so we'll walk through this here. So let's say there are 3 traders and 3 apples on the market. The current order book looks like this. Sell 1 apple for $5, sell 1 apple for $3, and sell 1 apple for $1. So how would you calculate market cap? You wouldn't add them up. What you would do is you take the price of the first trade times the apples in circulating supply. And so as he explains here, what happens is market cap is calculated by multiplying current price, which is the average closing price among all the exchanges, and that's multiplied by circulating supply. And as he says here, it doesn't matter if there's orders at 10 billion. If it doesn't get filled, then it doesn't get calculated into market cap. So now the market starts to move up because Bob buys 1 apple for $1, 1 apple for $3. So now he has 2 apples, which he has paid $4 for. Now he starts to sell his apples for $5. So Bob sells his 2 apples for $5 and somebody else sells an apple for $5. So what's the market cap now? It's $15 because it's the price of the trade multiplied by circulating supply, which is 3 apples. So notice it doesn't take $500 billion to raise market cap on a $500 billion industry. It can take far less money. So if we look at this a little bit differently, as the article says here, suppose the apples were slightly spoiled and the traders drop the price to $3 because nobody wants bad apples. So now Bob sells 2 apples for $3 and somebody else sells an apple for $3. Market cap is now $9. So the market cap lost $6, but as he says here, no fiat money were actually withdrawn from the market. And so you can use these examples and you can keep going with it. It doesn't take $500 billion to manipulate the price of a $500 billion coin. So as he says here, on some days you can pump Bitcoin price by 1,000 with just 50 million. Since there are 16.8 million Bitcoin in circulating supply, the market cap will increase by 16.8 billion even though you invested 336 times less in USD. So you can manipulate the price of Bitcoin and inflate the market cap with far less money than you might think. This is really interesting as well. So analysts from JP Morgan say that the net inflow was about 6 billion, which resulted in 300 billion in market cap. So now the market cap has gone up, it's gone down, it's gone up, it's gone down. So if you just say 9 billion, which means that 2.2 billion in Tether would be a quarter of all the money that were ever invested in the cryptocurrency market. So if you look at it like that, it's quite a bit bigger than 0.5%, and it could have a much bigger impact. Now he goes into whether or not JP Morgan is using the right figures, and it really doesn't matter. Even if you use larger figures, Tether still is a significant part of all money that was entered into crypto, and during the whole run up, so much Tether got issued that it was a serious part of that run. So the last thing I wanted to show you here is this story here. So Liberty Reserve was a Costa Rican digital currency service that billed itself as the oldest and the safest, the most popular payment processor serving millions. The site had over 1 million users when the US government stepped in and shut them down. But I want you to notice what they were doing. So deposits could be made through third parties using a credit card or bank wire, but Liberty Reserve did not directly process deposits or withdrawals. Deposited funds were then converted into Liberty Reserve dollars or Liberty Reserve euros, which were tied to the value of the US dollar and the euro, respectively, or to ounces of gold. Liberty Reserve dollars. They took your money, they gave you a token. They took your money and they gave you a token. Does this sound like something we just talked about? They made money from charging a small fee. Transactions were 100% irrevocable, which is pretty much like Tether. So why they got shut down is they were operating a money transmitting business. That is exactly what Tether is. So they got shut down because they were operating a money transmitting business illegally. A money transmitting business, a money transmitter, is a business entity that provides money transfer services or payment instruments. Tether is a money transmitter. It's a money transmitting business. If you don't believe me, all you have to do is go to FinCEN and look at their registration here. Tether Limited, registered as a money transmitter. They're registered with the Financial Crimes Enforcement Network, the Department of the Treasury, as a money transmitter. So as a money transmitter in these states, the government has the right to shut them down and to say that they cannot operate anymore. The government can do that. So even if the money is there in the bank accounts, even if it's 100% backed by USD, the government can still step in and shut them down because they're operating a money transmitting business. And simply the fact that they were subpoenaed by the CFTC shows that the government sees some issues with how they're running this. And it's very possible, it's very probable, and it's extremely likely that they will be shut down. When will that happen? Could be another year, could be another 2 years. We don't know. When governments get involved, it takes a long time. Liberty Reserve operated for years. From 2006 until 2013, they operated before the government stepped in and shut them down. So will Tether blow up? Will it get shut down? I think the odds are that it will, and it's very likely that it will because it's extremely unstable and not sustainable. And simply the fact that the government is looking into all these issues, we don't know the result of that. We don't know what they're going to do. But if it does blow up, it's going to have a significant impact on the market. So this video was a little bit longer than I thought it would be, but I really wanted to show you guys some of the issues and really talk to you guys about those issues because it matters to this market. So this video is pretty long and we'll just close it here. I think we've shown a lot of issues that both Bitfinex and Tether have. It's not very transparent. They never released an audit. What they just released is not an audit. And simply the connection between Bitfinex and Tether is a conflict of interest in itself. So if nothing else, that's a serious conflict of interest. That's going to do it for this video, guys. Thanks for watching. Appreciate your support. If you're not subscribed, we would appreciate you doing that. We've got a lot of videos planned and you don't want to miss them. If you have a question, you have a comment, leave that in the comments and we'll do our best to answer them as we have time. Take care.